Thank you, JT, for setting that up. Nice. Welcome, Bull. Welcome to Xtrades. There you go, guys. Awesome. Let me know if that works. We're about 17 minutes behind, but no worries. I got all day. Yeah, no, I'm from Atlanta, Georgia. I just got a draw, I guess. Grew up in Atlanta. I live in Florida now. Working on YouTube. All right, so I'll give it like 5 more minutes and then we got to get going. Everybody that can't see, switch over to the YouTube link posted above by JT and you'll be able to see. From the A as well, yeah. I grew up in Marietta. Well, south of Marietta. So it's 11:18 right now, and 11:25 on the dot. We are starting. Then we can figure all this stuff out next time too. Worry if you missed it, I will do another class. This is just the beginning. You can't see or something's going on, and whatever happens, you miss it. Don't worry about it. We'll do another one. Oh man, crazy just to think name. I don't even remember how I came up with that, but it's nothing indicative on anything. It's just, yeah, I don't crazy Abe. Well, my last name is Andrews, right? Crazy Andrews, but I don't know even how I came up with that. And the whole baby goat thing, that doesn't mean I think I'm the goat. It was actually a humble beginning. And you get into the trading world, a lot of people have goat. I'm the goat, the goat. Well, I figured I'd be like, all right, well, I know I'm not a goat, so I'm a baby goat. Meaning, I'm up there, I'm not as good as these other furus. You know what I mean? A baby goat. I'm on my way. I'm up and coming. No, I'm not from Texas. This is the overnight session. And I'm going to do NQ and I'm going to switch over to QQQ as well. The reason Q, especially if you want to learn my strategy. QQQ, I mean, you can look it up on the Webull app because they got 24 hours now. Using on here, you don't have 24 hours, so you can't see the London low, you can't see the London high. That's between the hours of like midnight and 6 o'clock in the morning. So you can't see any of that. And why that's important and why I say it's absolutely imperative, at least using my style, is because QQQ is just an ETF of the NASDAQ, the future. The markets actually follow the futures, right? NQ runs 24/6, right? So it's running all night. Those liquidity levels that we put in overnight, highs and lows, they matter. Without looking at NQ, you have no idea what they are. That baby go. And that's not like a gloating thing at all. If anything, it's me saying that I know I'm not the GOAT. But one more thing, guys, too. Just so I can get through this on time and I can cover the material. I'm not going to be answering questions in the chat. There's going to be a lot of questions, but I don't have time to stop as much as I would like to. I don't have time to stop and answer every question because then it would take us all day. The best thing I can tell you is if what I talk about today, if what I teach you today, if it resonates with you and you feel like it could help your trading, then I would recommend doing a one-on-one. Right? That way you can further your education. But the whole idea of this class, free to everyone, I teach you all the basics. And this is what I say with any trading strategy. Doesn't matter who you're using, how you came up with it. In order for it to work, you got to have some conviction. You got to believe in the strategy, right? You don't believe in the strategy. If it doesn't resonate with you, then you're just going to be looking at a bunch of shit on a screen and you're not going to truly believe in it. So when I say any and stop using like 14, 15 different strategies. Find one that resonates with you, one that makes sense with you, and then stick with it. Because the biggest problem I see with a lot of traders that don't do well is because they're constantly on YouTube, they're constantly watching trading videos, they're reading books, trading in the zone, all that stuff. And for them, it feels very ambitious. Like, yeah, we're going to really figure it out because I'm putting in a lot of work. Wrong. Less is actually more, guys. If you're, and I know everybody has done this at some point in their trading career, from video to video on YouTube, different person to different person. Right? All that does is give you analysis paralysis. Right? You've heard of that. It overwhelms you, it confuses you. Find a strategy that you like, one that resonates, and stick with it, at least for 90 days. But we say it like this. Just because a trader is on a hot streak doesn't mean he's a good trader. And that goes just because a trader's on a losing streak doesn't mean he's a bad trader, right? Profitable trader is defined as somebody who they have a system, they have a plan, they have conviction, and they turn all that into consistency, right? Long-term profitability, that's what makes you a profitable trader. Long-term consistency. You can't do that jumping around from strategy to strategy. It'll never work. All right, we're getting started, guys. So first thing we're going to go over is that's the very first thing. You know, all the indicators and stuff on trading, it's cool and all, but the main thing that I suggest you want to learn is market structure, how to read price action. Because at the end of the day, that's what's most important. Then once you figure out and you have confidence that you can read market structure, then you can start adding some indicators. But I see some people posting these charts, and this isn't a knack at anyone, But I see some people posting a chart and it looks like the Matrix. There's no way that you truly understand what's going on in that chart, because it's most important, the data, the price action is buried. I don't use a lot of indicators. I use stuff like VWAP. I do use trend lines. Occasionally, I'll use some moving averages or EMAs. But I only use that for confluence. As a matter of fact, that's like the 5th thing that I do. If I break it all down, it's going to be time is the most important, which the first thing we're going to go over. Then the key levels. The 3 is the imbalances I'm going to go over on the charts. The 4, and my personal favorite, is the Fibo. That's the only 2 I use consistently. And then very last is your indicators, your trend lines, your moving averages. That's just going to be for confluence. But you never want to be like, oh, price is hitting the 200 moving average, I'm loading the boat. It doesn't work like that, and it's not supposed to work like that. You got to have confluences. And what I always say, as long as you have 3 or more, if you have 3 or more confluences, it's a higher probability trade. Right? Also, the more confluences you have, the more of a probability of that trade working out. Right? So just keep that in mind. Let's get going. All right. So for market structure, what I mean by that, I'm actually going to do this on QQQ since I already have these lines up. Start on the weekly. And a lot of people refer to this as a top-down analysis, meaning you're starting from a high time frame and you're working your way down to get a bias of what the market's actually doing. Is it bullish? Is it bearish? Is it consolidating? The whole idea behind this is you're taking a trade, you want to have at least 2 time frames that agree with each other. Preferably you want to have 3 or more, but let's just say, for example, like on Tesla right now. If you look at Tesla, this would be a good example. Just take everything off. So we're looking at Tesla, and you're looking at a weekly, right? It's bullish. How do we know it's bullish? Because at a high or low, right? The weekly is bullish. The daily. Zoom in on the daily. We got a high, low, higher low, lower low. So the daily could technically be considered bearish right now, right? But if you're looking at the bigger time frame, get why I'm bullish on Tesla right now, right? So remember, the larger the time frame always trumps the lower time frame. It's just a quick example of what I mean by bullish and bearish on a larger time. Now we're going to break it to QQQ. First, this is hey, you can look and say I'm bearish, right? High, higher low, high, higher low. Weekly is dominantly bullish. So we're going to go down to the daily. Daily, still making higher highs and higher lows, especially we just broke out of this. So right here, if you didn't see all this and you're just looking, the daily made a low, lower high, lower low, lower high, lower low. This pattern, this market structure is until we get a break above, a break of this main bullish on QQ, and we've really been doing well the past couple of weeks. Here, broke out. So this is a good time to use a trend line of some sort to get an idea of what we're doing. This was the line to break, right? We broke out of it. When we broke out of this, I stand out that I was looking for a new all-time high on QQQ, but first we're looking for a pullback to the 61.8 fib, right? As we get the breakout, now something I want to say about this is I never break out, never, because a lot of times it's going to be a fake out, because that's what every trader is doing. They see this line, they see a break, we close above, oh, jump in. Might be right at first, but I'd say at least 80% of the time, after we get the breakout, we're going to have a pullback first. Right? And the way I measured that is using the Fibonacci. Just go from, look, if you've never used the Fibonacci, let me break it down like this. If you're looking for a pullback, you're just going low, swing low, to swing low, like right here, swing low to swing high, and low to high. Let me. You can see everything. So Fibonacci is a retracement. So you go swing low to swing high, and they give you the 23%, the 38%, the 50. And look, guys, I know for some of you this is very basic, but I don't know what level everybody's on. So I'm gonna assume that everybody on this stream doesn't know anything. All right. So the Fibonacci low to high, 23% pullback, 30, and so on, 50, 61.8. What I like to normally do is put my settings, especially on the first pullback. Like if we're getting a breakout here, which we did, I'm looking for a pullback to the 50, 61.8. I'll go back to my settings. All this out. And this isn't a blue box special. We'll go over that, but don't. This right here isn't the blue box. Okay, let's change the color so you don't get. Looking at the 50 and 61.8. So, 2 weeks ago, we had this breakout. I was talking about a new all-time high if we came down and held. I sent out the buy zone for it. Once we started getting the pullback and we entered, I think it was 518. I sent out the level 518 was the level to buy. Can't remember exactly, but we got the breakout, we got the pullback, right? But I'm going to show you once we get the pullback and it starts holding, we came back down, we went below the line, came back above. So this was it's called a BRB, but this one isn't perfect. BRB stands for break, retest, bounce. Any way I can make the stream full screen. Am I like this? Yeah. Hey, let me ask you, let me just pause and ask. Can everybody hear my voice okay now that I got the headphone in? Good. See where I was at. So I lose my train of thought very easily, guys. Got terrible OCD. So we got the breakout, got the pullback. So the next step, once we get into the position, or you can do it before you get into position. Sometimes I like to get in and then map out my targets because I already know where my stop is or where I'm wrong. So we get the pull out, breakout, pullback. I want to get my target. So you're going to use an extension, fib extension. It looks like this. Same thing as the other one. Going to start from the swing low, swing high, low, pullback, which are catch headings. And really, it just depends on which one we're on in terms of Elliott wave. The fifth wave, like we are on Tesla right now, I'm only going to use the 50 and 61.8. Fifth wave isn't supposed to go all the way back to 100. It can go to the extension too, but not really supposed to. So this one is just your typical ABC, right? I'm going to put on the 100%. And on the 100 and the 78. So looking at it like this, got your breakout. Entering here, never enter on a breakout. Break to come down. If it keeps going and you miss it, who cares? And this is just my strategy, right? Get the breakout, wait for the pullback. You get the full pullback, get in, then you have your targets. Target one's already been hit. The way you can measure this using an ABC is just like this. Same thing, swing low, get the pullback, ABC, and the reason it works and how to look at it is C wave could be, or most of the time, could be the same length of the A wave. So that's how the Fib extinction measures it. That's the 100%. 100% represents that this C wave is now the same length as this wave, right? So that's called a measured move. The market works in a lot of ways simply by measured moves, Fibonacci, market structure breaks, things of that nature. So you got the 100%. That's our target. Now, if this is going to be like a really major breakout, where this is the third wave, we could extend it all the way up, which I don't think this is going to happen. Let me just throw that out there. But 61.8. So if this was to happen, and again, very unlikely, I don't think that's the market we're in right now, then it would move like this. It would no longer be an ABC. And going to be a third wave up. Right? 1, 2, 4. And we're doing this on a daily, but if I broke it down to a weekly, you'll see that. Well, let me just do that. So you guys understand this. 1, 2, 3, 4, 5. The market moves in wave. That's all it is. And I'm by no means an expert in Elliott wave, guys. I know the very basics of Elliott wave. He hasn't been around much. I can't even think of his name, but Xtrades. He's an expert in the Elliott wave. I just know the basics. And basically what I've done for the past 5 years, I watch people, right? I watch people. And it took me about 2 or 3 years, and then I finally realized I was doing the same thing that most people do. I was jumping around from strategy to strategy, from YouTube video to YouTube video, from book to book. And I was telling myself, this is going to make me a successful trader, very profitable, because I'm putting in a lot of work. But I was doing it all wrong. So I basically wasted 2 or 3 years of my life just jumping around from strategy to strategy, right? And it wasn't until I found, say it's one strategy, but really what I did was, anybody that I watched or any trader that I felt was consistent and was posting good alerts or was showing YouTube videos, I took bits and pieces from everybody. Right? Whether it was ICT, smart money concepts, whether it was the Elliott wave, doesn't matter what strategy it is. I've watched a lot of people. I've learned throughout the years, taking bits and pieces of each strategy, only what resonates with me. So if it makes sense to me, and I was like, yeah, I could use that. I'll pull this one from that person, this one from that person, and then I developed a strategy that I started using consistently, and then I became a consistent trader. As I got a strategy, right? I believe in the strategy. I know it works. It works every time, but I have a strategy that I believe in. The only way this works, because let's say, for example, say you try out a new strategy coming up on Tuesday. Try out a brand new strategy. 4 days in a row, you lose. Using the strategy, you lose. What most people are going to do, they're going to throw that strategy away and go to the next. I say you got to use a strategy, whether you're doing it on paper trade, whether you're doing it with real money, it doesn't matter. But you got to have a way to build up your confidence, and you got to use that strategy for at least 90 days. If you don't give it at least 90 days, you're not getting a true feedback on the data that you've been trading, right? This goes back to journaling your trades. Now, I've never been a big journaler, but everybody I've ever come across says it's important, especially if you're trying. I never have ever logged down a trade, but ever since I started doing futures, they log them for us in a way. So I do go back and review some of my stuff, but yeah. You got to find one strategy and stick with it, guys. And you got to use it long enough to build up your conviction. Because if you get on a strategy that you've been using for 90 days, right? And it's, let's just say after 90 days, they had a 65% win rate. But right then and there, you know that the strategy works, right? If if you got a 65% win rate in 90 days, that's incredible, right? So it works. So what happens the following week? You have a red day every day using that strategy. You're not going to throw it away. You're not going to panic. You're not going to be discouraged because you know it works. You've already ran it for 90 days. You've already seen it be consistent. If you have a couple of losing trades or a whole week worth of losing trades, you're not going to throw that strategy away because you have conviction. You believe in it. So, and you know, a lot of people talk about how trading is psychology. And in a way, I agree, but then there's parts of it that I disagree with because the psychology becomes easy, right, once you believe in your system. Right, so I just went off on a little rant there, but that stuff's important, guys. I want to break it down kind of like you're inside my mind. So just remember all that stuff. All right, so you got your wave. We went over all this. I don't think that's what's coming. I drew this out, I don't know, probably about 2 months ago. But this is what I think is coming, and I think we're on a wave 5 for QQ right now. So, in my opinion, based on my analysis, I believe that we're going to rally probably for the rest of February, about halfway through March. Of course, there'll be pullbacks and stuff, but I think a big like 10% correction could come around late March, early April. Again, it's speculative. I have no idea. I'm just throwing it out there. Let me show you guys what I had on up to kind of resonate with what I just went over. I always go back and double check my work to make sure, because I'm on a different screen now, so this might not even, just double check. Came here, came down, and here. This is the blue box special. Yeah, so this is it. So this is the blue box special. It's always on. The BBS is always on. The BBS is always for pullback, and you notice you have settings on it is going to be 38 to 50, right? And the reason I say this is I don't even think this was the leg, but the reason I say that is because when you're dealing with the waves, wave 1, wave 2 typically supposed to be the biggest pullback. And then the reason behind that is because once you get an impulsive wave 3, bulls gain a lot of confidence through this wave. So the pullback should just be a normal light pullback to 38 to the 50. Right? Wave 4 is where the BBS comes in. So it's here, BBS. You guys see that on all my charts? That's what it is. It's the wave 4 pullback after wave 3 has completed. Get that pullback. If it holds this box, and you have a strong candle like this, you can anticipate that wave 5 is coming, and it's consistent. Let me move on that. So with wave 5, we pull back from wave 2 here, and here, right? It's supposed to be on the 5061.8. Remember that too. On the 5th wave, always use the 5061.8. Do not use the 100%. Right? You see that based on this one, 1, 2, 3, 4, 5. On this one, we've already hit the first 2 targets, right? I think you run up to about 550. It may extend a little bit, but I think it's coming to an end. I do think that a bigger breakout is coming based on what I showed you, but I think we're just going to go on an extended run all the way up to 583. Doesn't seem feasible. But anyways, I'm getting off topic. Let's get back to market structure. Grab some water. All right, let's get back to time. We're going to go and start going over the top. I went on a little rant there. And when I'm doing classes, it's easy for me to be like, I'm going to keep it structured. I'm going to talk slow. And I even wrote down a bunch of stuff to be like, remember, don't go off topic because I enjoyed this so much. What happens is once I start teaching, I want to teach you everything I know. So that was probably a little overwhelming for some because I'm showing you the fibs, the Elliott wave, what I think QQQ. What does what QQQ is going to, or what I think it's going to, have anything to do with this class? Right? So I get off topic like I'm doing right now. Let's get back to NQ. So we market structure. What I use is the weekly, daily, hour, 1 hour, and the 15-minute. I throw everything else out. Doesn't matter, not important. This is my top-down analysis. Weekly, daily, 4 hour, 1 hour, 15-minute. Right? Before I do my analysis on. And then my entries, normally on the 5-minute, 15-minute, if I'm doing a swing, if it's like a swing setup, if I'm scalping futures, I'll be looking at the 15-minute and the 1 minute. But let's say I'm looking at Google. I'm gonna start it on the weekly to see if we're bullish. Matter of fact, let's Google just so you guys can understand market structure. This is very important for me. You can have all the indicators on and this and that on your screen. None of that means shit unless you understand bias that the market, the current market that you're looking at is in. You got to understand market structure and be able to have some type of bias saying, okay, I know this is bullish, right? So then you're going to break it down from the weekly to the daily to the idea is to have at least two or more that agree with each other. As you go lower, the time frames may be bearish and bullish, right? So if you're weekly and daily bullish, right, you go down to a 15-minute, and the 15-minute is bearish. If you classified it as bearish, that means there's to take a trade because your weekly and your daily trumps everything else. If they're bullish, then you got to go down to the 15. We're in a point. What do we do in a bullish market? We buy the put, right? A bit there. So let's just take a look at Google. Oh, if we zoom out, guys tell me. You guys tell me. Bullish, bearish, chat, but obviously this is bullish. Frame, making highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This is dominantly bullish. So we're going to break it down to a daily. Daily, the first thing that I notice when I'm looking at it is we broke market structure. What I mean by that is we had a high, higher high, higher high, and so on and so on. Once we broke below this, the most recent higher low here tells me that the market has shifted, at least term, to a bearish trend, right? But you can't really confirm that because it was a gap down from earnings. Gap down for earnings doesn't, especially on a Mag 7 name like Google. We know that gap is from the earnings. We still haven't never went up at a lower high and then come down and make a lower low. So yes, great market structure. We haven't came back up. If Google was to do this, it was bearish. Get a bounce here if it comes up here, and then starts to go back down below this again. What's likely been this A, B, C corrective move, or a big dump off. That measure. That's just an example, right? Taking on market structure right now. That's what we're focused on. So the daily, we broke structure, but we haven't actually formed a lower high yet. So it's not technically bearish. It's like it's neutral. We don't know. Everybody knows Google is my top play right now. We'll go over that later, but I want to stay in line and stay on task. So we'll go down to the 4 hour. Again, you can definitely classify. When you're looking at the time frame, don't zoom out and be like, oh, high, low, high. Oh, this is definitely bullish. So you got to zoom in on like at least the past 5 days or something, right? Unless you're looking at the weekly or daily. But here, you know that we broke structure. The series of higher lows, higher highs. Came down, we broke structure. Not only did we break it, we hung out there for a minute, right? Volume is more important than price. I go over that. So the longer you hang out in a price area of interest, the more important that becomes. We now know, and we're just going to put a line right there, somewhat in the middle. We know that this 190 level, 190.83, come up and reject it, it's not going to be good. We can come up and have a small rejection and then break through or consolidate and break through actually into actual level is going to be higher the rejection candle. Because this formed an imbalance. This formed an imbalance. And the imbalance, no, we'll go over that in a minute. I'm going to take on to the market structure. We broke market structure. Now we have a high, low, lower high, low, lower high, lower low, trying to possibly form a higher low. As this holds, right? High, higher low, then we need to break. What I'm expecting is it's going to come up here, reject, come down and hold, and then eventually break through. All right. So then after the 4 hour, I'm going to go down to the 1 hour. What do we see on the 1 hour? Looking at the left. Same thing as the 4 hour. We got the low, lower high, lower low, so on and so on. But we got to look at the most recent lower high. Going to be area here. This is the most recent lower high in the structure. So we know for a fact that 188.20 is the key level to break, right? It's one of the key levels. It's an area of interest when you're dealing with market structure. So what we want to see for a confirmation for the 1 hour to turn back bullish, you want to see a break. You want to see a break above this level. And then right there, once we hold it and start that market structure. So you like this again. At your low, high, or high, low, and we want to break above. This is the most recent structure. You got this point here, this point here. Anytime we have a support and resistance level, it touches both sides. That's a strong area of interest. As a matter of fact, the more times it touches from each side, the more important that level becomes. Right here, you see we got 1, 2, almost 3. That level caused the breakdown. Then you had this that came back up and rejected it. Right? They haven't been able to get back above. So the moment get back above and close hourly above this 188.20, we put in a higher low, like right here. we can go ahead and assume once wants to close first. Remember that. It can't, that's why I never play breakouts. Got your move, you above. You're not like calls or go long just because we broke, right? You want to see an hourly close above that level, and then you want to see a back tap of some sort. That way we can have like this. That's where I can explain it. Have this. I get the point. So if we come up right here, right, and we hold that level down, we hit it, and the candle closes above, now we can say that, all right, this 188.20 is very important, right? If we're above it, we bounce. Above it, we bounce. Below it, we reject, right? So if we come up and reject this, it's not a good look for Google. But if we get above it, come on and hold, now we have another support and resistance flip, right? Meaning that resistance will come again. And we also know that it was old support. As soon as we broke down and rejected it, that support became resistance. So we need to reclaim this 188.20. That's what I mean by market structure. And that doesn't require moving averages or EMAs or VWAP or CCI, RSI, MACD. None of that stuff doesn't matter unless you already have an idea, bias on what the market's going to do. Just by looking at the candle. Right? So after the 1 hour, go down to the 15-minute. So let's just do this. Determine that the weekly was bullish, right? Weekly is bullish. We determined that the daily is neutral, right? We don't know yet whether it's going to be bullish or bearish. Hour determined that it definitely was bearish. Here we have a weekly that's bullish, but a 4 hour that's bearish and that's neutral. So that tells us we are in a bull market. 4 hour right now it's bearish. Actually, if you're looking at it, it could be put in a higher low right here, which is why I'm in call. But just to teach you guys the market structure, this was bearish until down and we closed. So technically, it is putting in a higher low. It breaks back above the 188.20. It's going to be bullish again unless it breaks it down. So that was that. The 1 hour, we just went over that. You guys know what we got to do there. Now the 15-minute is where I really look for my entries. Oh, that's market structure. That's the top-down analysis I'm talking about. All right. Now I'm about to get into the time and stuff because I can't really show you how to for a position unless you know the time-based side of it. So remember this: everything I teach you today used on any time frame. That's the idea behind it. That's what resonated with me. I didn't want something that only worked on the daily or only worked in the 1 hour. Everything I use and teach is it's compatible with every single asset in all of the markets, whether you're trading Forex, futures, commodities, crypto, equities, doesn't matter. Chart is a chart. It's full of data. Each candle represents data. Right? And if you didn't know this, some basic stuff, you're on a 15-minute chart and you're looking at a candle. This one right here. This represents 15 minutes worth price action. That's what it represents. You have your upper shadow, lower shadow, your open, and your close. There you have your open. This didn't have a lower shadow. Let me find a better example. Right here. You have your open, have your lower shadow, upper shadow, and then your close is going to be at the bottom. Close on a green candle is all up. Close on a candle, in this case white, but you guys know what I mean. Always going to be at the bottom, right? Bearish candle, open, close, bullish candle, open, close. I say this, the wicks do carry weight, but they're not, for me and what I do, they're not extremely important, right? Because all this is just noise. The wicks, it's noise. Where we opened and closed is what's important, right? So we're going to go to time now. just ask the chat. You guys even hear me? Look, has it been choppy the whole time or just occasionally? You know what I'm going to do? Since we're in Amazon calls, as soon as I get off this class today, I'm going to go to Amazon.com and I'm going to order like 10 of those mics. Maybe we'll get a boost Tuesday from our participation in buying product from. That's right. I need a mic, but I'm about to move back to Georgia. So I was waiting to move back to Georgia to get everything set up. The majority has been in and out. So basically what you're saying is you really haven't benefited from everything I just said, correct? Well, I'll tell you this, February 26th, I'm moving on February 26th back to Atlanta. I get up there, see, right now, there's no fiber in go high speed. Where I'm moving to, they have, who's it by, but it's fiber optic. I don't know if this is true, but I've always heard fiber optic is the fastest, at least better than high speed. So I'm gonna buy one of those mics. I'm gonna have fiber optic, and we're gonna start doing these classes more regularly, so everybody has a chance. And yeah, I mean that's it. We're gonna start doing them more often. Yeah, do you like fiber? Starlink. I don't know about Starlink. I don't know that I would want to pay for what that. He jumps up on the thing. I apologize. I can't neglect it though. You know, I gotta. I'm just gonna do this. But I can. Um, I have been in a trade before, and was doing good. She jumped on my. I started clicking buttons. She bought like five. I think she bought like five more contracts. So ever since then, I had to really let her know you can't jump up. On whatever. Yeah, Chris and JT, and I'm gonna get me a good mic. I'm gonna learn this OBS stuff and basically just figure out all the streaming stuff. But I'm not one that's ever going to start making YouTube videos. It's not me. But I do want to get a mic and make this better for you guys. The only reason I'm doing all this is so you guys can benefit. So we're going to go ahead and keep going. So we went over market structure. So you guys should have that. If not, like I said, we're just going over the basics. I don't expect all of this to sink in. And it's important that you don't try to understand completely everything that I'm showing you today. You want to grasp a basic understanding of and move on. But if you're still thinking about market structure, when I move to the next piece, you're going to miss the next piece. So don't try to overwhelm yourself trying to be like, well, I really understand that. He's moving on. Fine. You're not supposed to learn everything the first time we teach you. Right? Just make sure it resonates with you and move on to the next part. Now we're going to move over to. And for this, I'm going to go to NQ. Remember, in case you weren't on, So in case I came in late, when it comes to SPY, QQQ, IWM, Dow Jones, DIA, those, in order to use my strategy, you have to be looking at futures. Let's go outside. Sorry about that. Yeah, when you're trying to get these levels, because if you're looking at QQQ, all you're going to see is the pre-market after hours. You're not going to see any of the stuff unless you're looking at the Webull mobile app. I even had Webull pulled up. Still, you see that the cutoff time is maybe it's up. Oh, yeah, it cuts off there at 8 o'clock. 2000, 8 o'clock, and it doesn't open back up again until 400 the next morning, which is 4 o'clock in the morning. So you got to be looking at this. I'm going to show you why. And some of you guys probably have never even looked at futures before. Nasdaq, yes. This is Friday's price deck. And this step right here is like the, this is the foundation for what I do. Market structure and then time, which is the most important. This is the foundation of everything. If you don't do this, then for me and what I do, I can't form any type of trading plan without figuring out the time. So this is Friday's price action. You notice I have a candle right, I mean a line right here, 9:15. Right, and remember too, yeah, so on Trading View, when you're looking down here at the time, so I'm toggling over it, just look down here. See it says 9:15? Trading View shows you what time that candle opened. I know people here use Webull, and this is very important. On Webull, if you're looking at it, you see the same thing here. 9:15, what time the candle opened. It shows you what time the candle closes. For anybody using Webull, just remember, when you're toggling over the candle to get your time, it's showing you what time the candle actually closes. So if you're looking at the last candle of the day, which we're doing right here, I got it marked out. The last candle of the day shows up at 1600, right? That's 4 o'clock, right? 1600 military time. So 4 o'clock is when it closes. That's what it's showing you, 1600. But if you go back to Trading View, and let me just show you QQ so it's the same thing real quick. People may or may not know this, but I always think it's very important. If we put a line on very last candle of the day, time it's showing 3:45, 15:45. Right? Are still the same exact candles. Still the same candle, guys. It's the exact same candle. Right? The only thing that's different is Trading View shows you what time the candle opens. Webull shows you what time it closed. So very important you understand that in case you are using Webull desktop, mobile, it doesn't matter. I just know some people in here do. I use Webull to trade off of. That's where my accounts are, where I execute my trades. Everything I do as far as analysis, I'm on my mobile. I know sometimes I'll post those Webull charts. That's just me playing in my bed at night using my little pen on the notepad, and it's really quick, and it just gets my idea or my position out there. But then if I'm being serious about it, the more professional way, in my opinion, is using Trading View to get a clean, structured chart. So that's that. Get done with this time. Got them marked out. The reason I marked out all these is to be easier to explain. If it was like Friday morning, we wouldn't have all this. I didn't want to use the replay mode and all that. All right. Friday's price action, we got the candle, we got the line here to represent the overnight session. All right. This is going all the way in right before open for overnight session. Stops right here at the 1600. In this case, 1545. 345 was the last candle of the New York. Right? How I break down time, and it's really simple stuff, right? It's really simple. You're going to go back to the previous day. Right? Thing I'm going to do is mark out the close. Last candle of the day. Right? Then from there, you can write these time zones down, time frames. For the Asia session, I got it from 1800 to midnight. 1800 to midnight is the Asian, right? Or Asian session. Asia session from here to here. All right. Once you hit midnight, and I know people who have done this, they're going to talk about the times, and this is the way, this is what resonated with me, and this is what was most consistent for me, is laying the time frames out in this manner. So this is going to be your London session. You got Asia, London, and then the final one is going to be your pre-market. Pre-market. We're just going to pick pre-market. All right. So now we have, and remember, the way we're looking at this is don't pay any attention to any of this. Attention to that, because that's not how the analysis is going to work. We don't have that data yet. That's Friday. We're going into this as Friday morning, New York, which is 9:30 to 1600, open to close, 9:30 to 4. That's the New York cash session. Right? The way I determine that in a really quick way for somebody new is to turn on your volume. Look at it. You just take all this. You can't really see it, but the volume is always going to be highest during the New York cash session. That's the busiest time in the markets. Obviously, that's their initial open and close. So all of this stuff in between, you just mark out the last volume spike, and then that's going to give you an idea of where to look, if anything, and then you just line it up with the time at the bottom. All right, so we have Thursday. This is what I'm going to go over with my level. What was the time part of it? You guys should understand that. Asia session, London session, pre-market. So once we cross this, all Asia. Once you cross this, all London, pre-market, and open. Left of Asia is going to be previous days, after hours, or whatever, in the cash session. Right? So the first thing I'm going to do, when I'm looking at it, let's just say it was Friday morning or Thursday overnight, I'm getting prepared for the day. I see my plan. First thing I'm going to map out is the high and low, right? And you can go to the daily, but I have all this stuff on here right now, so it's going to look messy. But the high of the day, the previous day, this is going to be your previous day high. And remember too, look, let me just show you, if you're going to start using this, you want to start using it, just see how it works. This is the easiest way to have it set up, right? Have all your stuff lined out, and the way you do that, this is going to be previous day high. I use acronyms. So right now I'm about to go over all my acronyms because I know we've had some issues with that. So it's really simple though, guys, and you'll see why I do this because I'm not going to sit here and talk about previous day. I'm just not going to do that. Previous day high, EDH, done, right? And then you can just go to template, save as. Not going to save it because it's already there. Type it in, and you just save it. Boom. That's it. You do that for each one of these. Then when you're waking up and you start doing your morning analysis, it should never take you longer than, I would say 10 minutes. It takes me about 10 minutes to map out my levels. Be done with it. You got your previous day high. I'm going to turn off the volume. I don't like the volume being over there when I'm marking up my levels because it interferes with some of the wicks and stuff, so I'm like it off. So we're going to look at the lower day. 9:30, that's what time the candle opened. This is your lower day, but it's also previous day inside balance low. Right. I'm going to go to here. I got it set up. Previous day inside balance low. So some of you don't know what that means. Second. The previous day below is the previous day initial balance low. Initial balance is the very first hourly candle close of the day. So from 9:30 when we open to 10:30, that 1 hour worth of data is going to be your inside balance. We're going to mark out those levels. So when I'm looking back at this, this is what I always do. If the lower day just so happens to be, which it should be because it's the lowest low in the first hour. We're looking, the previous day low is the IB low for the previous day. We're not gonna mark it out as low as day. Mark it out as previous day IB low. All gonna make sense. Just let me get through it. So the IB low, we're gonna mark that high out. The IB high from the previous day. You're looking at candle, so it's, look down here when I'm doing it. It says 10:15. That's where the candle opened. Don't look at this and say, oh, this is 10:30. We're going to high up here. That's not how it works. This candle opened at 10:30. That's why this is so important. It opened at 10:30. The IB high was this wick right here. Boom. I know some people, because I did it. Trust me, I did it plenty of times, and I F myself up during a trade, thinking we're bouncing off that level, but we're really not. Don't look at the 10:30 candle. This is the IB high. This candle opened up at 30. It has nothing to do with the inside balance. This candle opens at 10:15. That means it closes 10:30 because we're on a 15-minute chart. So the high of this candle, as soon as this candle closes, that's your IB high. So now we got the previous day high, previous day low, aka previous day inside balance low. Wait a minute. Just so you understand what the inside balance is, it is the first hour of trading, and that's important because that's when we have the most volume of the day is during the first hour. So that kind of sets the tone for the rest of the day. For example, let's just say that, let's just pretend like this was some major level right here. Let's pretend that this was JTW's call entry right here for his plan. Let's say this level right here, this 958. Let's just say that was his level to buy calls at, right? You see that the inside balance, it wicked off of it, right? Then it came above, and the inside balance actually closed above. You get an hourly close of calls. That's what you want to see. So a lot of times you hear people saying, I'm going to wait for the first 30 minutes. I'm going to wait for the first hour. It's fine, because the inside balance is going to set the tone for the rest of the day. So if you wait for the hourly close, right? And we close above a key level. Let's just pretend SPY was at 500, and we go into the day and we're 498, right? We open up, we have a flush down to 497, and then before the 10:30 candle close, we shoot up to 550. That's going to let you know right there that the inside balance, the bulls took control. They closed the inside balance above a major psychological level after dropping $3 below it. That tells you bulls are in full control for that day. Doesn't mean it's always going to work out like that. Doesn't mean I'm saying just because we close above a key level, you can hold calls. Nothing's going to work all the time. But this is the high probability trade setup, right? So let's take this one off because it doesn't mean nothing. Just wanted to explain that. We got the levels, the previous day high, previous day low, inside balance high, inside balance low for the previous day. Now we're going to move on. We're going to move on to the Asia session. And in this case, I'm kind of consolidated, but I'm still going to mark everything out just so you see it. So this is going to be your Asia low somewhere in this area. Right, Asia low. We're going to map that out. Asia low, and then you're going to have your Asia high right around there. See, when you already got it mapped out, you already have all your settings saved, that it goes quick. So that's the Asia session, high and low. Asia low, Asia high. Now we're moving on to the London session. Going to map it out. High, your low. Is, I don't know, these right here. I don't know, I guess this will be your low. And I'm going to delete all these now so I can make sure that we're seeing the candles correctly. That's just for getting everything set up initially, you know? So you know how to break the sessions up. You have it broken up in the right segment. As soon as you have those mapped out, take all those. I don't leave those vertical lines when I'm trading. It'd be madness. So take all that shit off once you get everything done. Delete this one though. Just see right here. 9:15 candles when it opens, so the next candle is the official open. So that's where it cuts off pre-market. Then the London low is going to end at 600. All right, so this is going to be your pre-market. London high. Oh. For some reason, all it's showing is my Asia stuff. Let's leave that same color. I don't know why it's not saved. Let's save it. And I'm gonna map out the London low. And remember, it's all gonna make sense in a minute. We already mapped out. So the London low from 6. I messed myself up here going too quickly. The midnight's there. I got London high. It is. So in this example, basically you have your London low right here. We already had that map. Let me just go ahead and label it. We're not gonna have London low on here neither. Other pre-market level. I don't trust it. I don't trust it. but I'd rather do it myself. Besides, I've realized when I'm mapping out the levels myself, it only takes me like, but I'm also paying attention to the market structure. If you got an indicator that just throws it on there automatically, you're not going to really be paying attention, and that makes you lazy. I don't want to become lazy, and that you are. I don't want an indicator to do the work. And then I'll explain how you get your daily bias on what you do. Market from here from 6 o'clock 9:15. So we're going to mark out those levels. And we actually took this trade. So as soon as I get done with everything, we're going to be looking at the Friday session. And we actually took that yesterday open. So your market high and market low right there. All right, so now we got everything mapped out. The last thing I want to talk about, and something I know people have been asking questions about, is the 1200. Hold on, guys. I said I wasn't going to answer questions yet. I'm losing my train of thought too easy. Let's just keep going. All right. We got our pre-market low, pre-market high. Oh yeah, the 1200. And that's the midnight open, right? That's important. I'm going to explain why. But here's your midnight. Here's your midnight open. We're right there. But I got it marked as 1200. And I'll make that a different color because the midnight open separates everything and how it makes all this fall into place. So if we're looking at if we put a line midnight here, that's your midnight open. So the way we're going to look at it is we put in the London high, right? We put in the London low. What we're going to be looking for, wait a minute, the pre-market low. What we're going to be looking for is, have we broken higher low of the overnight session? For example, this was the London high right here. Put in the high, but we never came down to it. What happened? Put in the London high. What we did was we came all the way down from there. Remember, this is the overnight session. From midnight, as soon as the London session opened, we came up here, we put in a high. Came down and we swept London low in the pre-market session. So you had your London low, your London high, and then as soon as the pre-market opened, we immediately flushed all the way down market low. So I sent out in chat, I'm looking for us to have push back higher because we've already swept out the London low. So any dip that we get, we're gonna look to buy that dip, and then we're gonna look for a bullish day overall. I sent out that in the Elite Options chat. I'm not boasting about that. I want you guys to understand why I called that out, so it resonates with you and you can make sense with it. The reason I called that out is because during the overnight session, we came down and we took the London high. The London high is still sitting up there, and the reason this is important because this represents a lot of liquidity and represents a lot of liquidity at the London low. We've taken out the liquidity below, and we've come back above before market even, well, right as market is open, right? Because here's your 930 candle, right? And it works the same way if you're going backwards. Like if we take out the London high, if this candle would have taken out the London high and we opened up like somewhere down here, we're going to be looking to come all the way back down to that pre-market low because that's where the liquidity is. If not, at least the Asia low. We come down and we take out the Asia and London low for the pre-market, and we open up. That's what we've already been going up some because how it works with the 1200 is this is very simple. If we open below the 1200, I think it's like a 70% chance. I think is what it is. We're going to go back and touch that 1200 at least at some point in the day. Right? Again, doesn't always work. Not always going to work, but it works the majority of the time. When we open up, let me just put a line here so you understand what the time is. 9:30. That's where we open. So like this. You see from the midnight to the open. Soon we come back to that midnight. We come back at right? There's the London high. We took it out, but during the pre-market session, we took out the London low right here. Okay, so we're checking out liquidity to the downside. That means we should come up and at least touch that 1200 and take out the liquidity from the London high. Okay. What we did when we opened up, we immediately shot up straight to that 1200, came back down, took out the London high. I'll show you this. To a 5 minute. We open. Now you see it better. We put in, first of all, this fake head and shoulder, which is why I don't play it, because if you're playing the head and shoulders, you would have took shorts and you would have got your face ripped off of immediately. Because this was a head and shoulder, break below the neckline. And then we shot up. I always say you got to wait for the pullback, but that's another topic for another day. We opened up here. It already took out the London low. We came up. Immediately, we took out the London high. It isn't a coincidence, right? We get to it, and then we dump back down, right? Anything people did there, they see that we closed above, as we technically did. We closed above the London high. A lot of people got right here because they went long. This was going to be a breakout, and then the market turns around and dumps on them. I don't ever play the breakout. I used to. I lost a lot of money doing it. Now I wait for the pullback. And this setup, head and shoulder choppy. I want you guys to remember, we took out, this is your London right here. We took this out in the pre-market session, put it in a low. Then before we opened up, we had to reclaim the London low. Right? Up, we hit the London low, we bounced. We hit the London low, close to it, we bounced. Liquidity and high, down, hit London low, we bounce, back down, hit London low, we bounce. So this is holding up. The more time it touches, the more implicit. And it was holding on every dip. Buyers were buying it back up. So as soon as we got this little break, this is where we went long, and I sent this out in the chat, right? Okay, yeah, appreciate it, bud. So we got this breakout. Boom. I'm looking for this. I'm not playing the breakout. I'm waiting on a pullback. That's where it all comes in together. I take my fib, right? I'm not going to put it at the open. You're going to put it at the swing low, the most recent point that it came from, which was here. It started the breakout. Boom. Drag this up. The swing low. This is not supposed to be a box. It's only on the way for. But you see what I'm talking about. It came up. We pulled back. Look at the orange line, guys. We broke out of London high. That got my attention. I didn't go long there. I waited for the pullback, and I see that we held the 38.50 range, right, which is your first wave on the first one back. You're gonna just be looking for that 38.50, right? We did that, but you also gotta look for. I'm not just gonna take this trade just because it was a breakout. We pulled back. I'm not just going to take this trade just because, okay, we're hitting the fibs. No, I want to have confluence, right? We put VWAP on and just see where VWAP was. We got VWAP right there. It was still a little bit. The reason I took this trade to break, we created an imbalance. Right? Let's tell you guys about the imbalance. So an imbalance, fair value gap, doesn't matter what you call them, they're the same thing. but it just represents a major market shift. And the way you recognize those, see this first candle? So a fair value gap is the first three candles. 1, 2, 3. Right? The area in between, which is going to be here, this represents a price imbalance. What it represents is a strong move up or a bunch of orders down here left unfilled, right? Because we had such a strong move up and buyers are so strong that it created a price imbalance from here to here. But what typically will happen, always remember, everything I teach is not 100%, none of it, nothing. Have this pullback, we come down, you notice we create two imbalances, one here and here. These are, drag this out. These are imbalanced. You don't have to always draw the box. Once you start using it, once you get experience with it, you can just recognize it. You don't have to draw the little boxes. So we had to break out. We closed above the London high. That gets your attention. You want to see the pullback, at least hold to 38.50. If it does, that's one, that's one confluence, right? You want to look at VWAP. Is it nearby? That could be another confluence. You want to look at imbalances, fair value gap. Are we entering into an imbalanced zone? That's another confluence. And then you can even take it as far as if you want, I don't have them. Yeah, I do actually. You can even take it another step further, right? And this is where this is so important. This is where it really comes together. You know you got a high probability trade, right? You put on the Ripster clouds, and this represents the 9 EMA and the 21 EMA. We came down and we held the 21 EMA ribbon, right? That's just, if you're very new to this, it's the same thing as the moving average. It's just called an exponential moving average. The moving average is more smooth, right? The EMAs less smooth. Anyways, let's get back on topic. I broke down into the fair value gap balance. We had the 21 EMA right here, held the ribbon. We had 30 that it bounced right off of, right? And you know we had VWAP as the cloud. It's called Ripster EMA clouds. I'll go over all that later. So, then, guys, I didn't enter the trade. You could have, I think, 4 or 5 confluences. Let's see. We had the imbalance here. We had 20 EMA. We had the 38.50. We had VWAP right below. We had the imbalance. So we had like 4 or 5 confluences, right? Doesn't mean I'm going to enter the trade. Time. Hold on, let me get some. I'll answer questions later. There's 3 types of candles that I'm going to enter on, right? I'm going to, remember, we already have all of our levels, right? So we're using those as liquidity only, right? Meaning anything that has been swept in the oversession, we're looking for price to gravitate towards the other, like it did here. And if you want to see it come back and hold one of those levels, which it did 1, 2, 3, 4, 5 times. We got a major shift in market structure. This shift in market structure lets you know immediately bulls attempting to take control. You don't enter here. You don't enter on none of this up move. Wait for the pullback. And what I do, once we get the pullback, like, as soon as all this starts setting up, and I say, there we go, we're getting a displacement to the upside, meaning we're breaking market structure. Bull candle, and then another one. So this candle breaks above all this consolidation. This candle breaks above and closes above all of this consolidation. Right? So we know that's a big statement by the bulls, if you will. So now I'm looking for a pullback. We got 2 imbalances. I deleted the box. The chart's getting too slow. We got 2 imbalances. Imbalance 1, imbalance 2. We're waiting for a pullback into one of these. Now, this could have pulled back here all the way to VWAP and still been in the middle of this imbalance here, right? This large candle. But there's 3 types of candles I look for. We have our confluences lined up until we come into the confluence area. And we line everything, 21 EMA, imbalance, Fibonacci. I'm looking for three types of candles. It's either going to be a bullish pin bar, which is essentially what this is. You could call this a dragonfly doji or hammer candle. It's not really hammer because the top is too long. Anyways, you're going to look for three bullish candles. One's a pin bar, one's a bullish engulfing, and the other one is a hammer candle. Right? If I can find three examples. So this is more like a pin bar. Long wick, medium upper wick. Right? This is a pin bar, bullish. Especially, and these candle types that I show you, there's so many. You got head and shoulder, inverse head and shoulder, double top, double bottom, triple bottom. All these inside bars and all that stuff. I threw all that stuff out. I'll use it as reference if there's like a special setup. Only thing I focus on is a pin bar, bullish engulfing, or hammer candle. And if it's a bearish setup, it's going to be a bearish engulfing. It's going to be bearish pin bar or a inverse hammer candle. Right? I'm trying to find example for each. Okay, here, perfect. This is, and remember, it doesn't matter what color. It doesn't matter what color the candle is. It matters about market structure. I'm just trying to give you guys a general idea, but I recommend you look all this up. Pin bars. This one. This is more down here. Is more. So you got an inverse hammer that's green. I mean, the color don't matter. And you got a regular hammer that's going up, but it's red. The color doesn't matter. It's about the structure of the candle, right? I'm assuming everybody knows what a bullish engulfing is. I have a bullish engulfing right here. It just has to engulf the entire open and close. It doesn't have to, bullish engulfing doesn't have to engulf the lower wick, right? It just needs to engulf the open and close of the previous candle. That's a bullish engulfing. This is a bullish engulfing. This is a bullish engulfing. This here is a bearish engulfing. It's very close. This one doesn't get above, but I would still call that a bearish engulfing. I'm not going to be that nitpicky about it when I'm live. You don't have time to be that nitpicky, but that's the idea. And then the pin bars, and you know what a bullish engulfing is. So back to the original setup here. We got that breakout. You know that you have all you can see here, right? You're waiting for the candle that touches, the wick that touches, right? You gotta wait for that candle to close. You can't just be like, look, it's very important. I know we all want the best entries. We want to be like, yeah, we sniped the bottom. All that stuff's good for your ego, but it doesn't make you a profitable trader, right? You don't need to catch the exact bottom. You don't need to catch the exact top. None of that shit matters. The thing that matters is you have your setup, you have your confluences, and then you wait for that candle close. The market will do the rest. Right? You get in, then I'm going to show you how to draw out the target. So this candle closed. As soon as it closes, we know that it came down and held multiple confluences, 3, 4, 5, whatever. As soon as it closes, all right, I'm taking the trade. Right? Stop loss is going to be if we feel the imbalance. So I would take a just remember the bottom of this, the high of this candle. Normally I would put a line there, but it's in Q, so I should be doing this in QQQ, but you can't see all those overnight sessions, right? This chart looks overwhelming as hell, but it's really not. All right, so you put a line there. That's the close of the imbalance. So if we get in here, close of this candle, right? We're gonna give it room to breathe. It's gonna be down here. Gets back below the close of this candle, the trade is invalid, right? Invalid. Now we're in the trade. I'm going to show you how I get my targets. I'm going to use the fib extensions. Well, obviously you have a London high, all that stuff on your chart. So we're already above all that. As soon as we hit this candle, big bullish engulfing, you're above all that, right? that can be later used as like a backwall. How I get my targets is I'm going to use where we came down to, right? This was the swing low. So we're going to use the extension. Right? Swing low, swing high, pull back low, right? And on this return, I'll map it out and why I think we have more room to go on Tuesday is this settings are supposed to be 100%. And the 618. Right? So swing low, swing high, pull back low. That gives you your targets. So I sent out this trade. I think we sent it out in chat. I can't remember. I sent this out in chat, and we sent out this the game plan for Friday. I'll be looking for that opening move to eventually be a flush, right? And then you're waiting for that confirmation to go long. As soon as we got it, we went long in this trade. I drew out the targets. I think QQ was 538.50 or something like that. So this is why also too, I'll tell you something. If we got in here, right, and this is if you want to. Not everybody wants to do this, but some people like to get in small and then scale into the trade later once you have confirmation that the trade is going your way. So if you're looking for a way to scale into your profit, once you see that we come up, break this market structure again, we close above it. So we obviously know, okay, we're right about the trade. The entry worked. We got the follow through candle. So now you're looking for a pullback to some type of support to add more. So that's what happened here. In this case, you had your breakout. We got our entry on this candle close. We made a higher high, and then we come down a higher low off the London high. This resistance, support. Make sense? You see it come down and hold. That's the support and resistance flip from your London high. The London high was the highest level of the overnight session, right? Yes. So that means price, as soon as we break above highest level, which normally could be the Asia high, but we're in a bullish market. So whatever the overnight high was, in this case, London high was, if we break above that and have a big candle close above like that, that means price has gone into discovery mode, right? That's the term I use for it. Maybe a different term for people, but I like to say price has gone into discovery mode because we've taken out the overnight high with an aggressive bullish candle. That candle had volume. Then we came back, we back tested it, and we turned it into support. You know, if you see a candle like this, all this confluence down here, and then the follow through candle, something like this, you know it's bullish, right? 90% of the time, it's going to be bullish. Remember, nothing works 100% of the time. Okay? So then we pull back. We hold the London high. Add more, right? But then if you do that, then you got to possibly adjust your stop. I don't do this because I go in with my normal size, what I want, and then I set and forget, meaning I set my stop loss, I set my target, and then I just let it run. Doesn't matter how much is down, how much is up. I'm not out of the trade until it either hits my TP or it hits my stop loss. That's it. No emotion. Second. Yeah. Hey, I'm back. Had a little incident with my cat. She had gotten out. So, all right, where were we? So I try to. I really don't want to throw too much at you guys in one day. I'd rather leave it for the next. But I went over the Elliott wave, so this should make sense to you guys. You should have already picked up on this, unless you're just very new. Can you hear me, guys? All right. So most of the more experienced traders in the class should be able to pick up on what I just did there. I showed you how to mark out the Elliott wave. Remember, very basic stuff. So once this setup has started, you see everything out for you. It was a market manipulation fake. The market. This was a head and shoulder. You got your left shoulder, head, shoulder. We broke below the neckline and immediately just exploded. A lot of traders got caught short as soon as this neckline broke. You look at it, your neck pretty much. This was your neckline. Left shoulder, head, right shoulder. We broke down below. A big candle closed below. A lot of people went short right here, and then they got their faces ripped off. This is why I always say, don't play the breakout on any setup, whether it's inverse head and shoulder, trend line, ascending wedge, descending wedge. It doesn't matter what it is. Don't play the breakout. What I would have done in that situation, as a matter of fact, I think I had this set up to take a short, but it went through my levels. Let me just take all this out. Let's feel. So it's going to go from eye of the right shoulder this is going to be, when you're doing it like this, for like a head and shoulder, this is what I use. I use the 61. So as soon as you have your head and shoulder, you see it break down. I'm not doing anything until it pulls back minimum to 61 point. Right? And even then, same setup as we had above. Just because we have a head and shoulder that was pretty well defined, I'm not gonna lie. I was looking at it myself. I was looking over. I was looking at this. I was ready to take a short on it. I stuck to my plan. I'm not gonna play. This is why I don't like indicators and stuff. It's just all confusing. So much cleaner. All right. As soon as we came up in one candle, guys, just let you know right there that I'm no longer interested in the trade. In one candle, we closed above the 61.8 and tapped the 78. I'm not interested because we're about to break out, and we did. This is when I'll use a trend line. Got 1, 2, 3, 5 touches, so that's a confirmed trend line. Anything 3 or more, if it touches the trend line 3 times or more, it's a valid trend line, right? So, had your head breakdown, right? You're waiting to get in, but the candle you're waiting to get in on only breaks the trend line, but it's above everything. Right then and there, the trade is invalid. And I know that I had that set up and I was waiting to go short, but as soon as this happened, it did an imbalance with the box. This is your price imbalance. But you know, right there, bulls are trying to make. See that we closed and broke above on the breakout, this downtrend line, one breakout, right? It immediately flipped to this is going to break out. But why? We had everything that we talked about, you want to look for that first. We had the imbalance, created the imbalance from this candle to this candle. Like bulls are trying to make a statement right here. And we have another one, right? So as soon as it broke above and closed above all that, now I'm very confident that this market has chosen to go higher into discovery mode, right? And all I'm doing is waiting for a pullback. So I would have took all this off immediately. Any type of bearish setup, we're gonna take it off because it's no longer valid. Now, as soon as we get this breakout, I just put this on. As soon as it starts to pull back, that's where you want your entry to be. Swing low, swing high. Remember, I have all mine adjusted where I just setting and it does it for me, but we'll go over it more in detail. This is going to be the 50 and the 38. And this is what I was trying to get over all that. You see what happened here. This wasn't, well, let me just do this first. 1, 2, and I think this is going to go much higher on Tuesday before the 4. We'll come back to that. We'll work this out. So this was A, B, C. You gotta pick. That's very important because the market moves in waves, right? Whether it's up, down, up, right? Or the complete opposite. Up, down, market in waves. Every move is a measured move. Every move is a wave, right? It's just how the market moves. It's how the structure navigates. Right? So you got to pick up on that ABC because that's the first part. You can't have a 1 through 5 impulse wave unless you have an ABC corrective move first. That's exactly what this was intraday. BC, and then we broke out. So that makes this automatically wave number 1 because it's connected to the ABC impulsive wave. So from there, you're going to go back to your, take this off. Go back to your extension. Right? The first thing you're going to measure is the wave 1 low. This is your wave 2. This one. Make sure you're clicking the Fibonacci extension, guys. Have your wave 1. Boom. Do your wave. All right. So 1, 2, 3. Let me show you guys where that's going to be at. Use your fib to get to pullback. Oh, I take this. All right. 1, 2, 3. And once we get up to 3, the biggest wave, then we can measure the wave for pullback. Right now, we don't know it. So, but we just know the general market is looking to do this. Wave up, you know what I mean? And I think it'll be, in my opinion, which I have no idea, it'll be something just like that. Just barely break above that, and then I think that's when we're going to have a pretty big pullback, in my opinion, but completely speculation, and I'm not basing any trades on that right now. We'll see what happens when we get there, and we'll play it as such. And also, we're on a 5-minute chart, guys, so this is just for like the next week or 2, maybe. Not even that long. But the way we did this with the AC, and then we had this break, we held, and we're pushing higher. I do think the NQ is going to make an official all-time high next week. I think Tuesday through Friday. I mean, we'll have pullbacks, but I'm looking for a bullish move just because of what happened on Friday, right? I think this move will complete. So, got that off. That's time though. So we went over market structure, top-down analysis, weekly, daily, 4 hour, 1 hour, 15 minute, and then we're trading on the 5 minute or 1 minute. 1 minute for scalping, the 5 minutes more for day trades, and then anything, whether it's 15 minute, 1 hour, 4 hour. I wouldn't even use the 4 hour, but the 15 minute and the 1 hour is where you're going to be looking for more trading setups, and then the weekly, daily, 4 hour is basically getting your potential direction bias, whether or not we're bullish. It's not really a bias. I mean, that's what people call it, but you're basically just telling yourself, all right, this market structure is bullish or it's bearish. So it is 1 o'clock. One, market structure. Two, time. Actually, with the way I teach, we kind of go over everything at once because market structure, time, key levels, fair value gaps, flash, imbalance, the FIBO, and then obviously your indicators, particularly for confluence. I would never base a trade like a lot of people have this VWAP, and I'm not knocking them. It may work for them, but I just don't feel comfortable doing that, right? I do use VWAP. It's a big part of my trading, but I'm not going to take a trade just because we come down and bounce off VWAP. I need to see confluences there. You know, makes sense? Yeah, I'm going to have to answer your questions later. I don't really understand your question. You mentioned about 100 important. If low high from market session is covered, watch up. 1200 is going to let you know from midnight to the cash open, the New York session at 9:30. From midnight to 9:30, it's going to let you know whether or not overnight session took out liquidity from the lows. That's going to give you your daily bias, what you're trying to do for that day, whether you're expecting it to be bullish or bearish. When doing that, you can't be completely locked into your bias, right? Because then you're going to screw up. If we go into it, because it's not going to be like that. Like you can look at everything you want daily, all the way down to the 5 minute, and everything be bullish. Because this has happened to me. It's happened many a time. Extremely confident with your bias for the day. Into the day, and then your bias is invalidated because we come down and we take that overnight low and we close below it. Most people are going to get trapped that day and kind of go on a tilt because it looks so good. It doesn't. They can't really rationalize how in the hell is this going against me. They keep averaging down. They blow up an account because instead of just taking a step back and realizing that your daily bias has been invalidated, which it can happen. It doesn't happen often, but it does happen, guys. You got to be able to switch on a dime. I have a bullish daily bias going into the day, which I normally do. It's like a major bearish structure, but I'm not going to continue to trade if that overnight low has been taken out. I'll either switch to a bearish standpoint, or I just won't trade. I'll just because I got a lot of swings on. You guys, I like to keep a lot of it to the market because we're in a bull market, so I got a lot of swings and stuff. I'm comfortable holding those with plenty of time. Sitting there trying to go against my daily buy. What the 1200 tells you from midnight, the cash session, that's going to give you your low and high and whether or not liquidity has been taken out. That's the most important aspect of it. Is whether or not liquidity has been taken out. So we go back, and then I want to show you one thing. We're going to wrap it up for the day. We turn the volume back. This one I only turn the volume on when I'm looking. I don't want to get caught up. Overnight, midnight, going to be right here. All right, you're going to mark the open of the midnight. And then you know that all this from this point here at 9:30 all the way to midnight. This is all the overnight session. So simple things to make it make sense. You have a high put in, you have a low put in. You have a high, low, right? Okay. So we go up, we reject it. That right there immediately lets you know that that level of liquidity has been swept. When that happens, we see pullback. We just went over all of it. It held our influences. It held the 38.50, held VY. It had a trend line, balances. It had everything, right? So as soon as you see that, that's when you can go along with that next candle. But as far as the midnight, that's what it tells you. Your higher liquidity, your low liquidity. If we were to come down and take this out and get back above, you can go long, trade it all the way back. Let me draw it out. All right, so this was the open. Let's just say we opened up and we were to come down, go below it, and then eventually make our way back above. It's the same thing as up here, but now we're just waiting. All right, see the regain, pull back long, and it's always, target is always going to be back to this high, always. Now what I do is out with the Fibo, high to low. As soon as we get to that 50%, I'm taking half off, right? Because we already retraced half the move. Then I'm going to move my stop up to this last market structure. High, low, we hit the 50%. I'm going to hit my stop loss below right there. So we've already taken out, we got in here, we take off half here, we move our stop loss to right there. The rest, we're letting it ride. And it's the same thing that happened up here. This was the London high. It came down, we held it. That was your indication that the bullish bias has been confirmed. All right. Now, I'm going to take all that I just taught you, wrap it up. I want to show you one thing on Tesla. Because I want you to understand why. I want you to understand my conviction on Tesla. And it's a long-term view. So Tesla is a high beta stock. It has tons of volatility. You're going to have whipping around days, weeks. But I'm looking at it for more like a monthly. And I took everything off, do my analysis right here so you can see. So this is the last thing, guys. 5 more minutes and we're going to wrap it up. But I want to go over my Tesla analysis. So you see we had, yeah, no problem, buddy. We had ABC down. A, B, C. And you can see that better if you're weekly. I use the monthly because that's where it all looks the best for now and then I'll go down and look at the weekly and daily and stuff. I start with the monthly. You see we had your A, B, C. They completed. So this was the long-term corrective move. That huge run-up it had past COVID in 2021 mainly. And then, all right, so it had to pull back. Well, we got that pullback. A, B, C. That's any type of corrective move is going to look like that, your ABC. So that completed. How do you completely confirm that it's completed? You're going to use your extension. Point the start of it to point A to point B, and then you got to wrap it up at the 100. What happened? That means this C leg down was to the penny, guys. It was quite impressive. Is the exact same length of, so that confirms 100%. This was an ABC correction. It went to the 100%, and then we had a bullish move off of it, right? This is where we're going to start our 1 through 5, right? First thing you want to do is go ahead and get it drawn out. Yeah, we're not done yet. I'm going to show this. You're going to draw it out. 1, 2, 3. It's all going to make perfect sense too, guys. 4, 6, and it doesn't matter right now. I want to stay on the monthly chart, so it's a lot more smoother. Right, so everything I just taught you for a day trade, a 5-minute, we're going to do the same thing here. Take this down. So you see 200, and this is going to be that's the completion of the ABC. The first thing you got to measure next, wave 2 pullback from wave 1. So you're going to use your fib. The start of the move, swing low, swing high. All right, and remember that the wave 2 pullback can come all the way down to the 78% retracement. It doesn't matter as long as it doesn't take out the wave 1 bottom. It's still valid for that part of the setup, and then we'll go into the next. We're going to put on the 50, 61.8, 70. Which one does it hold? Okay, so it came all the way down to 78. That means this is what I do to make it cleaner. So I leave my 61 and 78 on. Wave 1, wave 2 pullback. It can come all the way down here, guys. You generally don't want to see it break lower than the 78, but just because it could come all the way down and make I call it a higher low double bottom. Higher low double bottom, as long as it doesn't break. And on this one, the wick does matter. If it wicks below, it's invalidated to me, right? It's invalid because we went below. It could be a flush of liquidity, liquidity, but I don't like it. Anyway, so we had the wave 1, wave 2. All right, so how do we get the wave 3? You're going to use your Fibonacci, your extension again, right? Yeah. So on the wave 3, remember, on a legit wave 3, you're going to see at least the 100%. But most of the wave 3, since wave 3 is supposed to be your biggest wave, the biggest impulse, you technically want to see that extend to the 1618. If it does extend, you know, okay, it's confirmation we are seeing a wave 3, especially if it's a strong move, which this one was. So we're going to make this, see. It does. And once I put it on here, I'm going to go to a lower time frame. So 1, 2, 3. You see the 3, we came up to the 1618. That's what we rejected. All right. All right. So once we rejected there, we know, okay, we got a pullback coming. So we're going to go back to the regular fib. The start of the wave 3, which is down here, all the way to the high of the wave 3. This is where the blue box special comes in, guys. Blue box special is just something I came up with to make me remember. I don't know what, but anyways, the wave 4 pullback, you don't want to see that going lower than the 50%. Doesn't mean it can't. The main parameter is it can't go lower than the wave 2 high, which is, the wave 1 high. This is the wave 1. Wave 4 cannot go below this or it's invalid. And for me, the way I dialed it in even more is it can't go below the 38.50. It has to hold one of those. That lets us know that buyers are still in control because we held above that 50% retracement. So for this wave 3, if we go lower than the 50%, that means we've now retraced 50% of this move. That means bulls aren't very confident in the move, or they would have stepped in at the so that we didn't break below that 50% threshold. If wave 4 holds that 50% threshold, then we can go ahead and assume, we haven't confirmed it yet, but we can assume that, okay, this is the bottom of wave 4, right? Held that 50% threshold. This is what, let me fix my markings. You got 38 and 50. And then, of course, this is always blue. So let me go ahead and map out this, and then I'll get down to a daily, and then you can really see it. So 1, 2, 3, 4, right? So how we're going to get wave 5 target, you're going to go back to using an extension. Right? Wave 2 low, wave 3 high, wave 4 bottom. Remember, once you get to the wave 5, it's the same thing as the first one. Using the 100, you're definitely not using that. That's going to be, like really, really overextended. You're going to use the 50, the 61.8, the 70. For this example, I'm not going to show the 78 just because I don't think it, well, I don't know it could, but that'll be a whole nother setup, a whole nother process. So we're going to make this, I always make this lime green. That's my main target, which is one I really don't. So if you have this, you can take this off. I'm going to leave it on for now. So we know that that was the 618. And I'm going to make. So now we got the full move. So now that we got everything mapped out, let me go down to a weekly. Zoom out. All right. I'm going to fix everything so you see it correctly. Each point. Always go back and correct it, because when you time frames, guys, it's going to be a little. I mean, I guess you don't really have to, but I like to make sure that it's accurate. I got OCD too, but I also love what we do. 100% accurate, no mistakes. Even if it looks like it's on there correctly, I still move it just to make 100% sure that it's actually connected to this. It's got a magnet on. You can turn on your magnet. I use a weak magnet. That way I can just get close to it and it'll suck it right in. That way I'm 100% sure that I have the exact point that I want. Well, I had a time frame on this by April. So between April and August. There. So now I'm going to show a different, the bullish move. So I'm going to make this white. Right? ABC 1, 2, 3. This is lock special, so I just automatically know that up. Blue. This is like you're basically watching me do my analysis. This is what I do, and then I send it out to you guys. So you know, do a screenshot to the Discord. This is my Tesla analysis and why I've been so bullish on it. This is on a large time frame. Remember, I'm on a weekly, right? So you see the AB action. It came down and it held 100% to the penny. It made the final wave exactly the same length as the first wave. Right? Then you have your first impulse. You have your pullback. You have your wave 3 that went right 61.8. Right? It went very. It went above it. In that general vicinity, we touched the 61.8. The move was so strong that we kind of went above it and started pulling back. And this is when I sent out those calls. Again, I was early, right? Because I was buying at the 38. I was buying at the 38, which is 355, and then it kept going. It kept going below. I sent out my first buy at 355 with every intention buy all the way down here. But I want to show you. Now, same thing. In between each wave, you're going to have another wave. And this is what made me so confident. Each you have wave one, wave two, wave three. We're looking at the wave four pullback. Wave four pullback, any pullback, any up wave is going to still be an ABC of some sort, right? Unless it's a micro 1 through 5. But you have your A, B, this is A, B, C, right? Show you. We measured the very beginning of this entire setup, right? On the top, below, the top. It's a different color. This is when I had kind of like an aha moment, and most should do the same when they see this, because it's hardly ever this picture perfect, but Tesla is following the technicals to an absolute T. So this was the wave 3. We had the A, B, C pullback. If you zoom in, this candle was 325.10, right? 325.10. 100% was 324.24, right? A lot of people don't know this because they're just looking at the daily. But if you're really been following Tesla, you know that morning it gapped down all the way to like 315. So what is just below 315? 50%, right? That's the level we actually held on that opening dump that went all the way down to 315. It got maybe within $1.40 of it. So we had confluence, just like I was showing you with the day trade. Of the ABC 100%, we know this is a potential wave 4. We came down in the pre-market, we held the 50%, then we had a big bullish candle off of that. Let's just go down and look at it. Check this out. Pre-market session, let's see if it even shows it. I think, no, got that covered. Watch this. We're going to go to Tesla because we won't show it. At least it does on mobile. I don't know. Here it is. I don't know if that was showing it, but 315.78. We go back to it. Look at it. 330.67. I don't know why this doesn't show that, but that's what really happened. That was a real wick. We because I was watching it for because that's what I do. But as soon as the pre-market session opened for everything else, this candle dumped down. We hit 315.78. And we came back immediately. It started to look very bullish, right? All plays in hand. You had your ABC, had your 100%. We know we dipped down to that 50 and we held it. Let's go back to the daily where everything's correct now. This is why. And look what we did. It's the same thing as that day trade setup I showed you. Remember, everything lined up. Doesn't matter what time frame. We had this candle here. The high. We came down to the 100% for the C wave low. We had an imbalance. Not a big one, but this created an imbalance. Now we closed above. You know what I'm saying? So this right here is now we can't confirm 100%. That's not, but we did bounce at the wave 4 potential low. We pulled in a bullish candle. We closed above that last market structure. This looked, and we had the ABC with all the confluence. So to me, especially given how accurate it's been with all the other stuff, I think this is now going to turn into A5. I could be completely wrong, guys. I'm not saying this is, but I'm very confident in this. Looking at the weekly, you got a pin bar, hammer, whatever you want to call it. We're about to explode and go all the way up to at least 500, 550 before we get another big pullback, like another ABC down, and then that last move to 700, which it could happen this year. Unlikely, but it could. But what I'm calling for is a move to 500, 550 by end of year. And, that's my analysis one more time. ABC corrective. 1, 2, 3, 4. Came down, held the 78. This wave 3 hit the 1618. The wave 4 pullback held the BBS, right? And it was also 100% of this ABC. Plus, we got a weekly pin bar. All this confluence. So now I'm thinking that Tesla is about to make this big breakout. Doesn't mean we can't come up, down, consolidate. It could do crazy shit right before we get up there. But at the end, like, we could do some shit like this. It doesn't matter in the thinking that it's gonna event at wave 5. Like, we don't know. That's why we put on. We don't know about the structure until actually confirmed. Right, so we put on our uniform. We come to the chart to the markets every day, and we play it day by day. You still got to have some type of bias on a long term if you're playing for swings. My bias on Tesla is extremely bullish. But I just wanted to show you guys a live, well, not a live, but an example. I'll do my analysis. And we're going to wrap it up today. My neck is. I'll do like 5 minutes of questions, guys. I answer as many questions as I can in 5 minutes. Go ahead. Yeah, you guys are very welcome. Thank you. Thank you. I'm honored that so many people came to this class, that wanted to come to this class, that wanted to learn. That means more to me than you guys know. I love what we do. I know I can be an asshole sometimes, or cocky, or talk shit. That's just who I am as a person. I like to talk shit. I like to have a good time. I got a huge sense of humor. I like to joke around, but I'm not a shitty person. I'm not a cocky. I'm actually a very humble person because I worked so hard at this that it's become sentimental to me. I love it. I mean, I absolutely love what we do, and I love teaching you guys. And I love Xtrades. I love this server. So if you see me in chat and it sounds like I'm being cocky or I'm talking shit, just know that's my personality. You know, if we just hit a big trade, I'm gonna say let's fucking go. I'm gonna have a good time. That's just who I am. Right? Yeah. So I just wanted to say that. Webull is the same way, but remember, anything I do on Webull is using the mobile, so this may not be applicable for that. But you would just go to drawings, and right here, this would be your retracement, swing low, swing high, you know, same stuff. And then Webull also has your extension, drawings, extension. This is just an example, guys. This doesn't mean anything, but you know what I mean. Now, I will say this, guys. If I have a preference on what you should do, what you should use, it should always be TradingView. Right? That's where the most traders are, is on TradingView. That's where you should be doing your analysis. But I always check prices on Webull. It's because obviously Webull is a popular software product that traders use. A lot of traders use Webull, but more use TradingView. But you can't just completely ignore it because the levels are going to be a little bit different because Webull adjusts for like it's dividends, gaps, and stuff like that. For the high, the all-time high, the all-time low for SPY, QQ, they may be a little different. It's important to know the all-time high on Webull just because thousands of traders do still use it. So I use TradingView, all-time high as my primary, Webull as my secondary, and I understand where that level is. We'll get into some more examples in our class, guys. And remember, all of this stuff is just basic. It was free for everyone to come in and kind of get an idea. I will do more classes. I'm going to do more classes. We're going to do another one next weekend. If you want to get dialed in to what I'm actually teaching, the one-on-ones are always available. I don't do a lot of them right now. I used to do a lot, haven't done a mentoring session in probably 6 months. No, but if you want to dive into this and really be one-on-one with me and ask as many questions as you want, and you have that as an option, right? If you just want to learn the basics, you come to these classes. I'm gonna be showing you some stuff. I'm gonna start doing like trade recaps on live stream, like Sunday night prep, getting ready for Monday morning. This case, Tuesday morning, I'll do a Monday night prep. Just stuff like that, so you guys have an idea, so you can understand my conviction and why I do what I do. If you want a session, just contact Chris. He'll set you up. Colorado. Yeah, we'll do another one, bro. Don't worry. Where do you live at, Bidgeword? You said you're 2 hours from me. Where I'm moving to was basically like Lake Lanier. I'm getting a place right there in Gainesville. So if anybody is in Georgia around the Gainesville area, hit me up, and like 3 weeks, we'll get together, we'll trade together. I would love to do that with some of you guys. If you're around, if you're within an hour of me, we'll meet halfway at a Starbucks. We'll bring our laptops and we'll trade together. Yeah, I like this time frame thing. Long term, 1 month, which is what Tesla is. Time frame, 1 month. Length of trade, it's a 1 year trade for me. Positional, swing trade, 4 hour weekly, day trade. So yeah, I mean that's for my day trades. I use the 15-minute and the 1 minute. I use my 15-minute to gain an idea of my bias. But the first thing I do is obviously I start with the weekly and daily every day. We've been in a massive bull market, so there's no need to check the weekly. But for anything else, like Google, Apple, Tesla, Meta, I want to check the weekly, the daily, unless it's a long-term play and you're planning to hold for at least a year, the monthly. I'm not really big into crypto. I just go over there. I'll tell you this. All my strategies work for every asset. It doesn't matter if you're trading currencies, which is Forex, so equities, futures. Everything I teach and do can be used on any time frame, on any asset that you can. If it has a chart with data, you can use these strategies. I'm going to wrap it up here, guys. I appreciate it. JT, if you recorded that, did you record the session, JT? Anyways, if whoever recorded the session, like my email or something to send it to me or post a link, I would always like to go back and watch the classes that I made. That way I know they make sense. Sometimes I can talk too fast, I can ramble. That's just how I am. Well, yeah, I changed my name and stuff, pictures a lot. Yeah, JT's here. Well, he may not be here. He's just here recording. Okay, cool. All right, guys, you're welcome. You're very welcome, and we're gonna do this again next weekend. And then, want to do one-on-one? Just contact Chris, or Renee. They'll get you set up. And yeah, we're gonna keep doing this. I appreciate you guys. Have a good day, and I'll see you on Tuesday.